the world's most valuable company, has been making headlines, and we're here to break it all down for you. As you may have heard, Apple shares were on a roller coaster ride this week. On Friday, they managed to pare losses that were initially driven by the tech giant's subdued forecast for the holiday quarter. This news had a significant impact on their stock prices. The stock opened down 1.5% in early trading, but earlier in the day, it had fallen more than 3% before the market even opened. This hit put Apple on course to lose a staggering $40 billion in market value if the losses held throughout the day. Now, what exactly caused this downward spiral for Apple? It all began when Apple released their sales forecast for the holiday quarter, which is traditionally their biggest earnings period. This time, however, they predicted sales that fell below Wall Street's expectations, citing weak demand for iPads and wearables. This forecast raised concerns about the broader holiday demand. With inflation sticking around, estimates from organizations like the U.S. National Retail Federation and Deloitte are predicting the slowest rise in sales during this critical shopping season in years. In fact, Bernstein, a prominent brokerage firm, noted that Apple's revenue growth has stalled over the past few quarters, and appears likely to continue to stagnate over the next year. They emphasized that the holiday quarter usually sets the tone for Apple's fiscal year, which runs until September, but here's where things got interesting. The stock found some support as data showed that non-farm payrolls in the U.S. rose less than expected in October. This development raised hopes of a pause in interest rate hikes by the Federal Reserve, which, in turn, lifted shares across the board. Nonetheless, at least 14 analysts cut their price targets on Apple, which pushed down the median price target to $195, according to data from LSEG. Currently, Apple is trading at nearly 26 times its 12-month forward earnings estimates, which is among the lowest in the so-called Magnificent Seven stocks. D.A. Davidson analyst Tom Forte weighed in, saying, "We view management's flat sales guidance as proof the company cannot rely on iPhone sales to drive shares higher, as it has in the past." On a brighter note, Apple's main revenue generator, the iPhone, saw its sales rise in the September quarter and is also forecasted to post an increase in the last 3 months of 2023. CEO Tim Cook also assured investors that the iPhone 15 models were performing well in China, alleviating concerns about market share losses to competitors like Huawei and local smartphone sellers. This assurance from Tim Cook was met with optimism from analysts. Dan Ives from Wedbush Securities noted, "The street will breathe a sigh of relief on this front." So, there you have it. Apple stock had a tumultuous week, with various factors influencing its performance. The big question now is how the holiday season and future product releases will impact the company's fortunes. Thank you for tuning in to Gadget Hunger. If you found this video informative, please hit that like button, subscribe for more updates, and don't forget to ring the notification bell to stay in the loop. We'll be back soon with more exciting news and insights from the world of finance and technology. Until then, take care.